Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today, as every Thursday, is David Kuo, founder of the Smart Investor out of Singapore. David, as always, great to have you on the show.
Hey, selamat tengah hari, Brian.
Now, Selamat Tengah Hari, it's the 4th of May. It's a public holiday in Malaysia and in Japan as well. So markets are closed in both of those two markets. But we'll take a look at all the numbers across the region and also start with crypto markets, where Bitcoin is at 29,123. It's up 2.12%. Ethereum is at 1,902. It's up 2.14%. Now, looking across to regional equity markets, we start where you're at, David. The SGX is up 0.03%. We've got Shanghai, which is up 0.54%. The ASX All Ordinaries is up 0.03%. The Nikkei is obviously closed today. The Hang Seng is up 0.96%. And rounding up the numbers, we've got the Kospi, which is down 0.19%. David, your view on market performance in the first half of the day?
Uh, Pretty positive, and I think it kind of follows on from what happened over in the US last night. Oh, by the way, since it's the 4th of May, I can actually say this is the one day a year when I can say, May the 4th be with you. Yeah.
I've seen that going around all day this morning.
Exactly. All I need is a lightsaber. Yeah, and I can, I can be somebody special. But anyway, may the fourth be with you today, and it is largely due to what happened in the U.S. last night. And when you have a look at the markets, in particular, when you have a look at the Singapore market, it's very interesting because some of the most well-bidded stocks here in Singapore were some of the real estate investment trusts or REITs. So we had three of the maple trees up there: Maple Tree Logistic, Maple Tree Commercial, and Maple Tree Industrial. I mean, those three were up there. Then we had the Ascendas ones, and then we had some Capital Land ones as well. And so I think people are kind of jumping the gun a little, speculating that maybe this is as good as it will get as far as interest rates and your deposits in banks are concerned. And maybe it's time to actually go into something else like real estate investment trusts. So that's my read on the market at the moment.
But David, yes, that is what the Fed has alluded to because we've reached close to what was perceived to be the terminal rates. Fed fund rates are now, after the 25 basis point increase, between 5 and 5.25%, but it still makes it the highest it's been since August 2007. So is that it? And are we done?
Well, if you have a look at it, I would say across the board, in principle, when you have a look at the inflation rate in the US is running at 5%, the Fed fund rate is 5.25%. So therefore, the Fed fund rate is above the rate of inflation. That is kind of where you want it to be. Does it need to be any higher than that? Jay Powell didn't actually sort of rule that out. And what he said was it will become sort of more data dependent at the moment. But he kind of thinks his job is more or less done now. But interest rates are going to sort of hover around sort of 5.25% for a while. He said there'll be no rate cuts this year. But I think he's expecting the credit tightening to do the rest of the work for him. So let's not forget that the Federal Reserve is withdrawing cash from the market. So it'll become increasingly harder for businesses and maybe even consumers to actually get loans from the banks. And so is his job done? Yeah, I think he's done a pretty good job, but it doesn't actually sort of rule out other problems that will happen in the US economy and across the world. And it's those things that I think is giving him sleepless nights at the moment, in particular the banking sector, Brian.
Absolutely. I was going to ask you about that, David. More problems in the banking sector. Pac West is, I think, down. Pacific West Bank is down something like 50% now. Uh, we still have a lot of trouble ahead.
Yeah, but let me ask you this question. You probably won't know the answer to this because I had to look it up myself, Brian. Since 2009 until today, which is 14 years, yeah, how many American banks have gone bust in those 14 years?
I don't know. I don't have the answer for that, but I would be surprised if it's less than 10.
Oh, it's a lot more than 10, Brian. Since 2009 until today, 513 banks have gone bust, right? 513 banks have gone bust in America. So why are we making a fuss over a handful of banks going bust now? I mean, on average, if you say from 2009 until today, 513 over 14 years, that equates to about sort of 35 banks a year going bust in America. So why on earth are we sort of being worried about, three or four banks going bust at the moment? It's a drop in the ocean compared to what's happened. That said, 2009 was just after the great financial crisis, and that was when the largest number of American banks went bust. At that time, we were talking about hundreds of banks, tiny American banks that went bust and had to be bailed out by the federal insurance deposit scheme. So, is it a problem? Yes, it could turn out to be a problem. Is it something we need to worry about? Yes, if you are a depositor in those banks, then you do need to be a bit worried whether or not you're going to get your money back. But they are underpinned by the federal deposit insurance scheme. So in that sense, I would say we don't have to be too worried about it. It's just one of the normal things that will happen. Banks will go bust, Brian. It's just that it's the speed at which they go bust now compared to back in 2009. In those days, if you want to take your money out of the bank, you turn up at the bank store at 8 o'clock in the morning and wait to take your money out. These days, you just do it overnight, click of the mouse, and your money's gone somewhere else. So it's the speed that I think that is worrying people, not the fact that banks are going bust, Brian.
So, David, again, we've got tightening liquidity in the US, um, and that doesn't augur well for potential recession that's everyone's predicted that's going to happen. How is that going to impact Asia then?
Well, recession is something that we need to accept. The recession happens. I mean, that's the whole point. It's a bit like somebody who only breathes in and doesn't breathe out. Well, you're going to die, aren't you? So I think it's the same with economies. Economies breathe in, they breathe out. They breathe in, they breathe out. In other words, they expand, they contract, they expand, they contract. It's just a normal process. And so, as far as recessions are concerned, I'm not really too worried about it. Uh, and I think if you are an investor, you need to make sure that you have a properly diversified portfolio that can handle virtually any economic conditions. But what a recession does do, Brian, is that um, it could mean that some people will lose their jobs, and it means that unemployment will have to rise. So governments have to be very mindful of that. They have to make sure that there are supports in place for people who do end up losing their jobs. And as a result of the credit tightening that is going on, what you will find is that households will find it increasingly difficult to sort of spend the money that they used to spend previously. Some of them will ask for higher wages. When they do that, they could either get the higher wages or they could get fired, right? And if they do get fired, it means that they have no income left whatsoever to go out and buy things. And so it's going to be a pretty difficult time. So when you have a look at what is happening in the world right now, we've got geopolitical tensions, we've got interest rates at uh, higher levels than most people are comfortable with. We've also got coming out of the pandemic at the moment, we've got supply chain problems. So there are lots of things for people to worry about. But I stress again, all of these things will dissipate over time. And if you are an investor, just behave like me, which is act normally. And if you are somebody who puts aside, say, a few $100s every month or a few $1,000s every month into stocks and shares, just carry on doing it and just ignore all the noise that is happening out there, because eventually it will go away. And in 10 years' time, you probably won't even remember half the things. Just as you, Brian, hasn't remembered that 500 American banks have gone bust since 2009. And at that time,
Absolutely.
I'm sure if you were around in 2009, it was horrifying to think that a bank could go bust. But these days, we can't even remember it happening, Brian.
On that note, David, remember that keep investing, and don't worry about all the noise that's happening around you. That's my key takeaway from you today, David. We've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.